everybody there, or usually whoever talks and moderators or advanced traders, they've been real helpful to answer any questions, and that's been real good.
That's great. I'm glad to hear that because the whole thing, Ryan, to be honest, was when I put the Discord together just for my trading buddies, right? Because I wanted a place where we could talk outside of BBT, so to increase it. And I got a good little team between you guys have. I'm sure you guys have been finding the Daily Oracle quite helpful. If you're not aware, Sandu, for instance, I know you're recently new. We have a page or a text channel called the Daily Oracle. Hamish is one of the best at aggregating news on the planet. So every morning you have a 2-page sheet that basically has everything worth knowing on it, and then he updates it at 8:30 for any new news changes, like when the numbers come out and stuff like that. So that's always a great way. Saves you just a fortune in time of sitting around and waiting for, digging through news sources. He does it all for us. I think I've thought about selling that. It's so stinking good.
Oh yeah, he writes.
Can you hear me?
Well, wow.
Yeah, he writes so good.
Hello, can you guys hear me?
Yeah, Kobe.
Yeah.
Oh, okay. Cool. I have a question.
Yep.
Thinking a lot about the idea of no spoon. There is no spoon. And I'm trying to kind of include that as I'm reading Cooling, Dalton, Ochoa, and trying to understand what that means as in terms of there being the reality of the auction process occurring, which is what we're trying to read and analyze and help to inform what we're speculating on doing next, right? That's a thing that's happening for sure. But then there's also the behind the scenes, the market maker, right? The broker that's also moving the price, which I think is what you mean by there is no spoon and why the pivots work. But I'm trying to square the reality of how the market is.
Yeah. Okay, so here's kind of my best idea on that whole concept. So at one point in time, and I want to say 1930s, 1940s through the 60s, even early 70s, the market was actually driven by people. Market makers were real people. There were the NYSE exchange, for instance, had I want to say it's 1,300 seats on the NYSE market maker seats that are available, right? And those seats were filled. Hold on, I want to know then how many market makers, how many market maker seats on the NYSE. 1,100. I was close. It's 1,100 seats. So and of those 1,100 seats, all 1,100 of them were filled by a person. So anytime you needed to do something, right, you had to back in the 40s, 50s, or whatever, someone would have to actually if you wanted to get an order and exchange it. It's the reason why all those big buildings were right next to the exchange, because they would actually have someone called a floor runner, and they would hand them a ticket, and that floor runner would run all the way down the stairs, all the way across the street, right in the front door of the exchange. That's why the front door of the exchange leads right onto the floor. There's not an entry area in between, right? Because they needed to be able to get right into the floor, wave their ticket, and try and get whatever they're trying to do. So the market makers were real people that were really working on doing things. And at that point in time, the auction was pure. It was a straight up cattle auction style auction. That's why it's called the stock market, right? Because it's named after the stock yard, right? Where you used to go to buy and sell. The stock market used to sell cattle on the stock market. You used to sell, you still sell pork, right? Pork bellies. And stuff like that, but it used to be much more specific. You used to not trade companies that do stuff. You actually traded the stuff, right? So over time, companies took that over. But also in time, the advancements of the computer system brought algo trading to a whole new level. And probably around the early to mid 90s, human beings no longer were in control of the market in any capacity. Right. So now that doesn't mean humans don't influence the behavior or the movement of the market, but it's computers that are eventually making the decisions, right? When the market maker moves the price, the market maker doesn't do anything, right? The computers are doing it. The market maker tells the computer through their iPad app. So like basically like in the morning, when I went to the NYSE, one of the funnest things to do hanging out there was getting to watch the market makers work in the pre-market. And they're walking around right now talking to each other, going back and forth between different desks, this, that, how about this, how about that, how about this, how about that, making little deals left and right, trying to figure stuff out. And they're carrying little tablets with them. And as they're carrying the tablet around, they're actually putting in price targets, things they're making. Hey, I've got 1 million shares from one client I need to offload. I'd like to get rid of them for 377. Would you take them at 377? And then, yeah, I got a buyer, but not for 1.5 million, right? So, and they go through and they put this all into a computer, right? So it is now that it's in the computer, once the market opens, it is now that computer's job to make the market, right? It needs to entice price participation, right? Now, in the old days, an auctioneer would do this by simply moving the price down until he finds the largest bidder, and then he would try and bid up the price as quickly as possible to entice fear of missing out and get people to chase in. But in this instance, it doesn't work like that. So when you're trying to square, there is no spoon. The reason why there is no spoon is because computers are in control. Right? That's just the fact of the matter, right? There's no way to argue that. If you look at the SPY, if you look at the Qs, if you look at the way they respond to the CAM levels, you're talking about a 1 cent to 2 cent turnaround, right, on a $400 ETF, right, that's running a 3 to 4 cent spread. So you're talking about a precision ratio that is almost impossible. You know what I mean? Just conceptually, in reality, right? Figuring out where something's going to turn within a couple of pennies when its spread is more than a couple of pennies. I mean, just the statistical probability on that is like almost impossible, yet it happens all day, every day, over and over and over again, right? So in order to really grasp this market and really get comfortable with some of the stuff we do, you have to relegate yourself in a very frustrating way, but it is difficult, but you have to relegate yourself to the fact that there is a system that is in control, right? And that's what I mean by there is no spoon, right? In order for the system to work, you must give yourself to the system, not become an uncontrollable variable in the system. Right. So, and that's what happens when you start to doubt the system, when you start to say, oh, I think it's going to go up, or I think it's going to go up, even though we're in a selling range. Doesn't matter. Right. It doesn't matter that you think it's going to go up. It doesn't matter if it goes up. You're in a selling range. Right. So the only thing you're going to do is wait for it to back test us, and then sell. Right. Oh, I think it's going to do this. I think it's going to do that. All right. If you say so. Right. But
it's predetermined, basically.
But things are going to go basically where they wanted them to go. And then they're going to turn around. Now, it's their job to entice the participation, right? So as you and I, right, are thinking about when to go long, when to go short, it is their job to get us to do that, right? And that's what you need to, and that's what we're paying attention to. We're not paying attention to the participants. We're barely paying attention to the system. What we're doing is we're paying attention to the combination of when are the right variables in place for the system to do what the system does, right? We already know what the system does, right? The system, like if we open under S4, right? The system, because of opening position, extension of range is most likely in a breakdown, we're selling. As long as we stay in a selling range, we're going to sell this thing, right? If the system turns around, right, and it gets above S4 and it starts to consolidate above S4, then we're going to recognize we're in a buying range, which is what the system will recognize as well, right? Because someone programmed it to do that. I don't know who did it, right? We'll never know. Like, I don't know who built, right, the algo that drives the SPY, but I can tell you whoever built it used CAM points, right? Because like I said, look at S6 this morning on SPY. right? I mean, it wasn't precise, but I mean, S6 is 370, 340 something, right? We went to 373, or sorry, 373. What was that? 43?
74.
40,
Right.
44, yeah, 43. And it went down to, it went down to like a low of 18. That's a pretty big difference there. But once you zoom out, you start to realize, man, it's really stinking close. You know what I mean? That's what you're gonna find here is. Spy looks like it just went. Speaking of S4, it looks like it went right back up to it. So anyway, so as you're coming into this whole concept of really trying to grasp the spoon, the proverbial spoon, as it will, right? The thing, what you're really trying to grasp is that this stuff works because it works, right? That what we're teaching you, and that's going to be the hard part of it, and that's what the hard part is. It is for every trader. It's conviction, right? Building the emotional fortitude that you need in order to be able to do the same thing over and over again, even in failure, right? Even after you've lost 2 trades, 3 trades, still pulling the same kind of trade and emotionally being okay with that, right? And that's and once you can do that, you are like 80% of the way to being a trader. Patterns, all of that stuff, really patterns, averages, tape, all of that stuff comes in due time, but it's the psychology of this, and that's the part I'm hoping to help you guys out with the most, is actually is helping you to build conviction that the market is a system that can be traded, but only if you're willing to recognize that it's a system, right? As soon as we get too obsessed with what everybody else is doing, right? That's when things go wrong, right? Whenever we start imposing our will upon the market, that's when things get really nasty. Just watch and pay attention. What is it doing? Right? Where's our demand? Do we have more bids? Do we have more asks? Where's our price range, right? Are we in a low range? Are we in a high range? Because remember, there are some points in the stock market in which you will actually sell low, right? And buy back lower, buy high and sell higher, right? We always love catching the bottom, but we're not always going to, because sometimes the bottom falls out, right? And that's
If
why you got to be paid
initiatives
attention to those
push it.
other things, right? And now when we get those breaks, when those bottoms break out, when the tops pop like that, right? That's when we get a lot of movement. And the reason why we get a lot of movement is because everything is in place for the market maker to do what they already wanted to do, right? But they now have the participation of the market with them. And that's what we're looking for. That's the butter, right? That's when we make really good money, right? Is because when you have there's 3 entities in play here, right? Bears, bulls, and market makers, right? When all 3 participant groups are agreeing on what's happening, we go. You know what I mean? Nothing holds us back. We just keep running, right? But if any one of those groups is in disagreement, we chop, right? So that's why the best moves are when you get that, you get that big breakout, you get that big breakdown, and then you have participants from larger time frames on prior days are saying, nope, I'm wrong. That's when things get stinking fun, and really move. All right, y'all.
Thank you.
I'm gonna pop back over to the main room for a couple minutes to say hi, people, and then I have to trade for Andrew in BBT.
Appreciate it. That was helpful.
Hear my
So tomorrow,
signal.
10:30 will be the first session with the mentee, so we can ask questions and go through some tape reading. And
Yeah, 10:30, mostly for tape reading, like 10:30 to 11. Questions, yes, but let's. I want to stay focused on tape reading because that's what's being asked for. But yeah, exactly.
yeah, okay, perfect.
Perfect. All right, I'll see everybody
Okay.
tomorrow.
Good luck.
Good morning, everybody, and happy hump day, is it? I guess it's Wednesday. Not so happy for the markets. I guess that CPI number came in a little higher than people had hoped, but as everybody's pointing out, it is a backward-looking indicator. So may not be indicative of where things are now, but of course, market's not liking it too much right now. What's going on here? Okay. So Twitter is the only thing that's really green on my screen other than the dollar, UUP, a little bit higher, not much, and natural gas. It's a gas, man. Okay, so DAL reported earnings this morning, not looking like the traders, investors really like that number too much. I'm not getting anything going on here. Okay, well, let's just see what the market's going to bring this morning here. I'm looking at DAL, possible rising devil trade. So shorting, maybe if it pops on the open. Tesla's looking weak, of course, on that Twitter news. Twitter's actually catching a bit of a bid here. So, of course, we're going to the next stage of the whole battle. Elon's suing Twitter, Twitter's suing Elon. I don't know what I don't know I'm kind of curious to know who actually made the bid. Did he set up a separate company to make the bid? He wouldn't have done it personally, I wouldn't think. Really? You did it personally, eh? That's kind of leaves you open to a whole lot of liability, which of course is what he has if that's what he did. I mean, you can be, you can set up a company and say this is, and then that company does a bid on, and you're of course a director of the company or whatever. So it kind of takes your personal liability out of it. A whole lot of things I'm not really clear on, just hearing stuff hearsay. So through all the different media. but it's it's going to be interesting. It's going to be long and dragged out. I kind of liked Artie had a good idea yesterday. We talked about in the closing bell, the last 30, because when you look at the weekly on Twitter, it's really keeps finding kind of a bottom.